here is gold's going to be done on a weekly chart, and it's going to be done with a 2-period stop loss. So as of the 1st of July, we will be doing the trading account for the managed fund. We need a 6 months history. So we will be looking at a weekly chart and nothing else. We will put the stop where the stop is meant to be. We don't care about how big the stop actually is. We're running at 10% of the account. So this is going to really test us now with gold. So what do we want to look at with gold? Let's first of all, let's just have a look at it with the wave. All right, Andrew, what are your thoughts with the wave here?
It's going to have to start going back up to it at some stage.
Because it's actually quite a fair distance away from the actual wave itself, isn't it?
Yeah.
Yeah.
But that's looking fairly red this week too. We're down to 14.05 at some stage, but it's a long week.
Yeah. All right. So what would you be suggesting? Still to the down?
Yeah, at least for this week.
All right.
Because to me the averages are fairly strong to the down.
All right. So at the present moment, what we're looking at here is our averages are shaping up between 4 and 6 on the clock face. So what that is indicating that is to the down. Now, if we were looking at our guppy is also saying to the down as well, right? So both the Napoli, Guppy and Raggy Horner are basically pretty much saying that this is to the down.
What about your 3x3, the first chart?
Just the plain 3x3? Our plain 3x3 with no Heikkanashi candles is also saying that is pretty much to the down. We can't take that to the up until that closes above that 3x3.
Yeah, it's still close below it.
Right, so it's still closed below it. So let's look at this. If we were taking this to the up, we were taking this down to the down, we would come up the candle to that one there, right? We won't come to the top of these candles here because they're still pretty much too close together. So that is our first high. Our second high that we're going to come up to, get up there, is pretty much up to there. So that's where our stop loss for that trade is actually going to be. Your stop loss is going to be up there. Your entry is going to be at market to there.
You're just going to leave that trade open, aren't you?
That trade's basically going to be left open
For the week.
for the week. So yeah, it's an open to the close on gold. Now we could risk putting a stop loss in there. But that's, as you can see, that's pretty high risk. So if we were looking at that, that's where our stop loss would be. 15.90 would be our stop loss. 14.49, which would be pretty much at market in our entry. And we've now let that run to the down.
The reason for not putting a stop loss in strictly by the rule of 2 candles back is because it's too close.
It's too back.
The closes are too close.
The closes are too close, and they're in a fairly tight consolidating range. So if we put our stop, e.g. in there, 1, 2, it's still likely to come back up to that level anyhow. So a more fair dinkum place to put it would actually be up there on that fractal up there. So if we wanted to truly do this practically, there's where our stop loss for gold would actually be. And then we would be leaving that in the play for 2 weeks, and we would now be compounding it to the down. So if this trade runs to the down for the week, fine, we'll run it down to the week. If it continues to the down next week, we will now be running and adding to the position on the same lot size that we're at. So on Monday, if this, all right, this is a dress rehearsal of what we'd be doing on the Monday. Our entry would be pretty much at market. Our stop loss would be 15.50, and then we would just let that go for the week. Now, we don't care how big the stop loss is. We don't care. The stop loss is going where it needs to be. All right? Mark, question.
Would we consider trading something else?
No. Your managed fund is trading gold and gold only.
The reason why I say that is because the last 2 weeks it's finished in the middle. And it's kind of like, oh, which way is it going to go?
The only option you have with your gold managed fund is no trade. Right? So if you're trading in the in-house, 1 week you're on your yens and 1 week you're on your gold. So the only option you have is no trade.
Okay.
Right? So if you took no trade, that's fine. We totally accept that.
Yeah, so it's, to me it's indecisive.
Right?
And it's already been down and it's going sideways, and so it doesn't know what it's doing, and so that's where the indecisive comes in me and looking at that.
Okay. So you would say no trade. All right, that's fine. You're saying no trade. Annette?
I think it's, by the look of that, it's still a down, but we're not talking
We're not talking a
a lot.
We're probably talking about 150 pips if we're lucky for the week.
Yeah.
And we're probably looking at 4 days of doing stupid nothing.
That's right.
And it all coming in on Friday night. So we're not looking at a lot of movement on this thing at this point in time.
If I was using my intuition on this, I would say to the down slightly.
Yeah.
Next week I would be looking at that up.
All right. So
it's my intuition. So.
All right. So you're saying to the down.
Yes.
All right, Andrew.
No, I agree with Annette. It's down.
Down.
But not a great deal down.
All right. So no, would you agree? 150 at the most.
Yeah.
Yeah. So what we're saying with gold is, I'm saying to the down. So we've got 3 to the down. We've got 1 is pretty much sitting on the fence, and that's okay because in this situation, the person has to be really sure that this is actually going to work. So if you're not sure, Mark, it's the best thing you can do is just sit on the fence and just leave it alone. All right, so we've looked at euro. We're pretty much thinking